biggest losers will be those that export commodities, and particularly mineral commodities more than agricultural commodities, because China's industrialization program is slowing down completely, whereas agricultural exporting countries can still export to consumers of foods and so on in China. The biggest beneficiaries will be those that have got skill sets to export as China moves towards a more consumption-oriented economy. So Singapore will be one of the winners in the longer term. The way China can buffer itself from this is to speed up the transition. And a lot of domestic reforms have to take place before China can move to a consumption economy. A lot of domestic changes to regulations regarding the free movement of labor, the ability for migrants to live in cities and so on, national healthcare, national social security systems, all those will have to come in place pretty rapidly.
If Chinese consumer were to spend less, or to invest less, it has a multiplier in terms of our exports of both goods and services into China as well. And because of the intra-regional trade linkage, it also means that regional growth would also be, in that sense, cut because of the linkage with China itself. China used to be churning out millions of sports shoes, for instance. Because of cost, it's cheaper to manufacture them in Vietnam. But if the Chinese are buying a few less pair of shoes, the Vietnamese factory producing and selling them back into China will also see a couple of shoes less being needed as well. So this kind of linkages is what we're seeing impacting the regional economies, in which slower China means slower Asia and slower the regional growth. The Chinese slowdown is both deliberate re-engineering of the growth drivers away from just depending on investment, pouring in tons of money itself, create the infrastructure, create the opportunity to grow, into more quality growth, as we've seen, which allows higher value added activities. Essentially, China is doing what Singapore is trying to do on a far larger scale.
Most of the impacts, I think, would be felt in the Asia-Pacific region closer to China. That is because in this region there's a lot of intra-industry trade among the countries, and with the increasing economic interconnectivity, I think there definitely will be more impact felt in this region. For example, the countries which have been exporting the commodities to China, I think they will suffer a lot, because with the slow growth, the demand for the commodities will also slow down. So, for example, countries like Indonesia, Malaysia, when they export all these commodities to China, I think they will experience some kind of slowdown. But as to other countries, for example, countries like Vietnam, which are actually competing against China in sectors such as textiles, and other countries in sectors such as electronics, I think when China slows down, they will probably benefit from China's slowdown, because as main competitors against China, with China's slowdown, they will have more export opportunities.
The TPP completely changes the game for raising the standards. Up until now, America has not been as competitive in this region because we have high labor standards, high environmental standards, high IP standards. In some industries, we've still done well. TPP allows America to compete on a level playing field, but it also raises the game for not just the countries that are signing it, but if you have a company that is going to invest in a high IP industry, they're going to look to Malaysia, Vietnam, and Brunei, as they have to Singapore. Does not Thailand, Philippines, Indonesia, and other countries have to raise their game to attract that investment? Capital follows protection, and I think TPP is going to really show the world what it means when you raise your game, companies invest.